Hi, this is Mike Maloney, and I just wanted to update everybody on the silver shortage that has been going on. Uh, some of the private mints are starting to catch up, but they are still quite back ordered. The US mint is starting to catch up, and because it's starting to catch up, we're seeing premiums on US silver eagles starting to fall again. So they aren't the wholesalers are not charging as much for the coins over the spot price as they were during the shortage. Now, in the last decade or so, there's been about 3 years where the U.S. Mint shut down early, and all of the wholesalers are expecting this to happen again, where instead of minting 2015 coins all the way to the end of the year like they would usually do, there have been a couple of years where they shut down in early December, mid-December, or some of the mints are actually expecting to shut down toward the end of November, and then they retool for the 2016s, and they don't come out with those until mid-January or so. And so there could be another shortage that's going to develop again, except premiums on them have come back down, and I wanted to show you a couple of charts here. This is just the silver price, the spot price that's generated from the COMEX, the Commodities Exchange, paper trading that goes on, where they trade IOUs for gold and silver. And what you see here is that it went along bouncing in a range from 1550 up to about 19 for the end of last year, all the way into June. And then June, July, August, it starts to plummet. And when it broke this range that it was in July, the spreads went way up. The spreads are the premium that this chart is from Nick Laird at ShareLinks. And so this is not a chart that I produced. It's an independent chart, but it shows the percentage premium that people have to pay over spot at retail. And what you see here is that everything goes along just fine all through 2014, 2015 until July of 2015, and then the spreads start to explode. And people were paying 27% over spot, and I think this topped out at about 32% over spot. This chart is from September 30th. And But since what this is the price discovery mechanism working, really. The stuff gets rare, people hang on to it waiting for a higher price, and that's what happened. The suppliers hang on to it and they won't let it go because they know that they've got a limited quantity and demand is higher than supply, and so they need price to rise to reduce the demand to match supply. But what this reminds me of is just yesterday we had a crash in Walmart stock. They gave some forward guidance, and the news had come out that they're going to have to pay their employees more, and their stock crashed by 10% in one day. And what you see here is the big crash, and then this is the volume of trading that goes on. Almost no volume, and then suddenly, bam, just huge volume. And how this applies to silver is this next chart. This is just these trading hours during yesterday of Walmart, and it's going along, and there's the bump, and then this is the crash. And what you see down here is the bid-ask spread, the price quote spread, so the quote spread. And what there are is there's a whole bunch of people saying, well, I'm willing to pay you this for the stock. And then the sellers say, no, 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 I want this. But in this case, it's going down, and the buyers are the people with the leverage. There's too many people that want to sell. And so they go, okay, I'm willing to accept your price. And the spread between the bid and the ask, this is what you call, these are market orders here, where you just place an order at whatever market is. And this is basically the brokerage house's premium. the difference between this bid and ask, and it's very tiny. And then with the crash, this spread just exploded, and people that are selling are saying, I want this price for it. And the people that are buying are saying, no, 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 I'll only give you this price. And so the sellers are saying, okay, I'll accept your offer. And the price falls each time one of these trades goes through, where somebody accepts a much lower offer than their ask. And so this bid-ask spread on silver, even though the price was falling, it went the opposite direction. The bid-ask spread on physical silver went toward the upside, so that what happened was on Silver Eagles, we didn't see the same price drop, that we barely saw any price drop at all. Silver Eagles pretty much have been selling for the same price during this the whole time that the premiums exploding like this caused this gap in here where silver fell. Eagles did not fall. They just sort of bounced around in a small range and went sideways up at the like $19.50 to $20 some level. And so they're the same pretty much today that they were back in September, when silver was on the commodities exchange, was trading at much, much lower prices. Now, I expect us to go into deflation before we go into big inflation or hyperinflation. I've said this dozens of times. We actually have on our YouTube channel, we have a playlist about deflation with many videos in there with me on the topic. And and this goes all the way back to when everybody was screaming, we're going into inflation or hyperinflation. I was one of the lone voices at the time calling for deflation first. Well, I think deflation is just right around the corner now. And the thing is, people ask me, well, how will gold do in a deflation? And gold and silver. And, silver will go down further than gold, but they will drop on the commodities exchange. The paper price of IOUs for gold and silver will fall, and with them the price of GLD, the exchange traded fund for gold, and SLV, the exchange traded fund for silver, those will also fall. But you won't be able to buy physical gold and silver at those prices. What will happen is the spreads will explode like this to the upside, and gold and silver will probably rise as they have in, when we look at history in episodes of deflation. Whenever there's something wrong with the currency, people rush back toward gold and silver, and when they do, they bid its price up, even though we're in a deflation and prices in general are falling. So that's what I'm expecting from the gold and silver prices in the future, is for the commodities exchange prices to fall sometime or another during deflation, but for this spread to just go huge. And a few years ago, in an interview, somebody asked me about this kind of stuff, and I basically said that gold and silver will be known as unaffordium and unobtainium. You just won't be able to get them. So that's it for now. Thanks a lot for listening, and subscribe to the channel.